So good evening, guys. How are we doing? And I hope we've actually gone through what we discussed in the last class this time. So today, like I said, we'll be talking about the zones in which we partially talked about in the last class, which is the supply and demand zones, which you said those are the major things that moves the market. Hmm? So basically, going through candlestick Bible, I don't think they actually talked about. Okay, let me see where they talked about the zones. Yeah. Okay, let's forget about that. You can actually check it. Let me use my own explanation. Now, when we are actually talking about the zone, I actually believe we still know how to draw our zones. I said talking about the supply and demand. So let me start by putting everything down, just like how we did in the last class. Talking about supply and demand. Supply and demand are the zones we'll be talking about for today. Is that okay? So now I said the I said the collection of resistance, the collection of resistance is our the collection of resistance is our supply zone. Oh, don't mind my spelling. While the collection of supports is our what? Is our demand zone. So this year, demand, the collection, and this supply, the collection of resistance. I hope you remember that. So now, basically, now I will explain this thing to you. Trading psychologically, do you know? Let me tell you the story about trading. So this story, we use this story when it comes to the laws, because now I personally would say there are three laws guiding demand and supply. You understand? Three laws, and I'm actually going to explain all this psychologically. So it's not as if it's in the written form. So you have to understand it. You understand? So after this class, actually, will be done with the first level. You understand? Which is the basics. You understand? We enter the intermediate, and all the intermediate just deals with maybe going live, trading, like you understand what I'm trying to say now. Then from there we'll go to advance. You understand, guys? So now talking about the three laws, like I said, there are three laws guiding the law of demand and supply. Now, don't forget what we said about support and resistance. That once a resistance is when, for instance, maybe a price of market is going bluishly and it got to a particular direction or it got to a particular price, there was a change in direction. You understand? So we are saying that's the resistance. Then the collection of resistance, which is the supply zone, means that these are zones, or this is a zone that if the price of the market tends to hit the zone, there will be a change in direction of the market bearishly. You understand? So now, like I said, there are three laws guiding these things. The first law, without wasting much of our time. Okay, I said I want to say a story behind this. Now let me start with the story. Now, the story about this trading is more or less like if you remember the first class, I said this trading actually wasn't made for us to make money. You understand? We personally, the retail traders, you understand? These people that owns this financial market are the big guys in the world. And I've made an example of Elon Musk, of maybe Fed, and I made an example of so many other people. I talked about the banks too. The banks are also part of the big guys. I even went ahead and talked about we personally we don't have the amount of money to face the financial markets. That's why we are using people called, or that's why we are using intermediary called brokers. You understand? That they serve as the middleman between the real market and us, the retail trader. You understand? Because we don't have the enough money, even even $30,000 is not enough money for you to just face the real market. Understand? Then we are talking about millions of dollars, billions of dollars before you can actually have to face the real financial markets. You understand? Without involving brokers. So now these people actually trade against themselves. These big guys. You understand? they trade against themselves, you understand? So now another says where two elephants are actually fighting, the grass suffer it, you understand? So what I'm trying to say is that when these people are trading against themselves to collect money from each other, we the retail traders, we suffer it, you understand? So that's why it's more advisable that instead of you creating an opportunity in the market, you understand, just find the opportunity. Know when these people are actually trading. So when you see when they are trading, it will be easier for you to think like them, you understand? When you see when they are trading, there are marks that you see that, okay, for instance, these people are already in the market, though fine, you might not know the particular big guy is there that is in the market, though. But no, you actually, with these signs, you will know the directions they are aiming for, you understand? So you just meet with them, you understand? You just take that opportunity to meet with them, you understand? So now, let me go. Psychologically, when this trading of a thing started, you understand? That was when the first law was still very, very well okay. And what's the first law? The first law says that when the price of the market, okay, let's call this our supply zone. So let's call it the collection of resistance zones. Let's call this our support zone, collection of support. So this will be what? This will be demand zone. The first law says that price of the market actually comes and hits a resistance or a zone. It has to fall back. Understand? The same thing applicable to when the price is coming down and it hits a support or a demand zone, that's to pick up. This was the first law. Understand? So it came to a time that now with this law, everybody started making. So it was a sad news for these big guys. So they came ahead again and said, fine, are you people? You know, another says before you can actually break the law, you have to know the law. This is the first law, right? So now they're like, fine, how can we break this first law? You understand? So they went ahead, and these three laws are actually working, but they work hand in hand to hand now. You understand? So now they said, how can we make money again? They're like, okay, fine, let's go against this law. Now the second law says that now this cannot actually continue for a very long of time anymore. You understand? So that's okay, fine. Let them say that there can be a breakage. There can be a break in this market structure. That is inside this range, price range. There might be a break bearishly. There might be a break bearishly. That is might actually come down now like this, bam, and break this structure that it was obeying, zigzag structure. Or it might break it bluishly. You understand? If I'm saying breaking bluishly, it means that it's breaking upward. If I'm saying breaking bearishly, it means that it's breaking downward. Do you understand? So now, that's the second law. Now, in addition to second law, I said, okay, fine. If it's actually going to break, listen very carefully, it's actually going to break, let us say bearishly, which is like this. It's actually going to break bearishly. Then it has to look for another thing that will push it up. You understand? Then when it push it up, it has to come and retest the zone it broke. You understand? Then starts coming down. So psychologically, what they mean here is that what they mean here psychologically is that once there's a break bearishly, what normally we already discussed about this thing in the support and demand, so in support and standard. The market does just not reach a particular price and say it wants to change, but I say there is something in particular that we actually have to shoot it up, which we call a support. So now judging by the past of the market, this support might actually have been a support in the past. That's why I say price action. You understand? Price action is more or less like predicting what will happen in the future based on what has happened in the past. Are you understanding? So judging by, okay, now, for instance, now let's say this was a support. You understand? So definitely the law, okay, let me explain the law. The law says that when there's a break, you understand, there has to be a retest at which of the zone is broke before it continues that market. Psychologically, again, it means that when if the market should break bearishly, it means that the market wants to continue in that bearish movement for a particular period of time. That is, wants to go down for a particular period of time. But before it goes down in that down direction, it has to retest this structure in which it broke. This zone it broke. It has to retest it before it can actually go down. You understand? I understand what I'm trying to say. So now, before it can actually test it, at least if it's break, then something has to push it up. So that's why I say it has to look for a nearest support. You understand? That will serve as a something that will push it up to retest the zone is broke. Same thing applicable to if assuming it broke it bluishly. If you look for a nearest resistance that we use to support to retest or mitigate the zone is broke before going in that upward direction for a particular period of time. You understand now? Now the question I'm expecting now is like now. So now when you see these two things, so after these three laws, we'll talk about chart patterns because we have a lot of chart patterns, and that's where I'm actually going to bring you guys assignments. You understand? So after today's class, we'll try and just go live. We'll just try and go live, like trading live. You understand? And using what we've learned so far, using the supply and demand and the chart patterns. You understand? So after that, we go to the advanced. You understand? The practice is more or less like intermediate. You understand? So you will try to get more there. So if you don't even understand, you can just relate back to the videos we've actually made. So now the question I'm actually going to ask now, like, okay, sir. Yes, sir. How are we actually going to know when the price of a market wants to break these zones, bearishly or bluishly? Because, for instance, because we might actually tend to think that maybe it's still the first law that is working, I might just respect it and come down, then go up. But how are we going to know that, okay, it is ready to break the zone bearishly or bluishly? Thank you very much for that question, Zach of Art. Now, let me answer that question. Now, that's where the candlesticks come in. Your candlesticks pattern. If you guys still remember what we talk about the candlesticks, you understand? So now I said they call this candlestick reversal candlesticks. Yes or no? Yes. Now, but I said you can actually spot the reversal candlesticks anywhere. So that doesn't mean that when you spot the reversal candlestick anywhere, there wants to be a change in direction in price of the market immediately. No. You have to make sure that the reversal candlesticks you are spotting before you make your decisions are in the zones. You understand? So when you see reversal candlesticks around the zone, that means there wants to be a change in direction. But if reversal candlesticks are not formed around that zone, that there's one candlestick we call three white soldiers. You understand? These three white soldiers are candlesticks that are okay. For instance, now let me show you an example of that three white soldiers now. Now, looking at here now, this is support. This is 24-hour time frame. This is support. Sorry, this is resistance. Sorry. You understand? The price of the market was supposed to obey it here and come down. But look at what happened there. It shows a powerful three candlestick. Let me try and zoom out. There's a powerful three candlesticks. You understand? That actually happened there. 1, 2, 3. You understand? These are called the three white soldiers, and they're also called the continuation candlestick or continual candlestick. You know, the other one is reversal candlesticks. So this one is called continuational candlestick. Understand? So that is when this continuational candlesticks are actually spotted around zones. It means that there want to be a breakage. You understand? Around that zone, that is the price of the market doesn't want to respect that zones. You understand? But when you spot a reversal candlesticks, it means that what? It means that there are higher probability or higher chances of changing direction for that particular market you are trading. I'm gonna answer the question now.
Yeah.
So for instance now, for this A to change, to come downward, a reversal candlestick was spotted here. For this B to change upward, a reversal candlestick was spotted here. For this C to change up, a reversal candlestick was spotted until it got to this particular place that it shows the three white soldiers and there was a breakage in the reversal candlestick. So in anywhere there has to be a change in direction around your zone, there has to be a reversal candlestick. Either doji, either ama, either inverted ama, either engulfing ama. That's why I told you guys to go and read about the engulfing. Sorry, to go and read about the other reversal candlesticks we have in the candlesticks Bible. You understand? It's not as if you have to know the name on your head. You understand? But you just knowing doji is actually enough. You understand? Because it happens most time, and it's one of the powerful reversal candlesticks we have. And the pin bar too, the ama, those three. You understand? So now that's about that. So now, when it comes to the chances that they actually now going to the third law now, we've talked about second law now. The second law is that you can break it. Now, going to the third law is now like more or less like a corny way of the second law. And I hope you actually understood the second law very well. Don't forget the first movement. The first movement means that it will break. Second movement, it will retest. Third movement, it will continue in that particular direction of. So now this third one is still the current one, the third generation which we are still eating now. You understand? That we don't actually know when the fourth one will actually come, the fourth law. You understand? But these three laws were propounded by me. Not like propounded by me, but like, you understand? I collected it together so that you guys can actually understand. So now the third law says that, let me try and cancel this thing. Wait, don't let me cancel it. Let us try and let me cancel it. But I hope you have it on your head. Let's have it on our mind, please. So let's do downward. This one down. This one down will be the example of the second law. So I'll use this up one for the third law. So now, the third law now says that. Are you listening? The third law says that, okay, fine. Since these people already know that once it's break, it will retest, then it's continue in that direction. How can we still make money again? Remember, it was because they were not really making money from the first law. That's why they provided the second law. Understand? Same thing happened in the second law. They have to make money again in the third law. Okay, fine. Let's keep on manipulating the market. What's the best way? And how is the best way in which you can actually manipulate this second law? You understand? Okay, they now came up with, okay, fine. Since we already told them that it cannot continue like this, the first law cannot continue like this, that there will be a breakage in the zone, and it has to retest it. Now let's work around that retest to confuse them. Now, what do they mean by that? Now, what they mean by that is now, okay, fine. If the market was, for instance, if markets break bluishly, you understand? You understand? Second law was that you look for a nearest resistance that will push it down to retest this place before it continues going upward direction. Now, you're not saying, okay, instead of it going upward in an upward direction, let us make it fall inside the range it was obeying before. You understand? So you know that normally you already know the first second law that, okay, fine. I'm likely to place my buy here around this place because it's actually going to go up here. You understand? So they try to walk around that place. You understand? So now the question, okay, now before we go back to that question, I've answered that question. Before we go back to it again, I ask myself that question is that, okay, fine. They now made it that if we fall back inside this price range, you don't know what happened when it fall back inside this price range. It has to, the fact that it broke it inside, it broke it in back. It broke out. It's more like a polygon zone. You understand? It broke the zone. But yeah, who is your father? But when you saw that outside the outside is very tight. It came back inside that zone. So when it comes back inside that zone, it means that it wants to go in this direction. That is the opposite direction it broke. You understand? So this thing now, this break that broke out now, they call it first breakout. Some people call it turtle soup. I will label it now. But let me just be done with the movement. So it means that it will come back inside the price range. Is this support? Then retest the zone is broken back. You understand? This will be the movement. It will come in here, use this zone to retest this zone. It's broken back. Then it will now come in this direction. Bam. Then when it comes in this direction, the same thing applicable to here. Since it actually broke a zone, any zone it broke, it has to retest it. Any zone this thing pass, break, it has to retest it. Do you understand? So the fact that it's coming that it wants to go in this direction like this, it has to look for another nearest support that will make it to retest this zone is break. For every zone is break, it has to retest it. Understand? If it's going to come down and break this zone here, because this one is actually going to be a zone too. If you look for another support down to come and retest this one, then it's going to come down too. You understand? And if reverse was supposed to be the case that maybe it's the first breakout happened in a bearish movement, it means that the market is going up. You understand? So let us know the sequence of the third law. You understand? One is that it breaks it. Two is that it came back to what? It came back to retest it. The three is that it falls back inside the price range. What's wrong with this thing now? Three is that it falls back inside the price range. Four is that it retests the zone is, it's past this zone down now, so it has to test back. To test this zone is broke. And 5 is that you understand this is better when we start trading. 5 is that it's broke this zone because it has to continue in that direction. 6 is that it has to retest. 10 is more or less like a repetition pattern. So now the question I said I was going to ask them was like, so how am I going to know that it wants to fall inside this price range back or it wants to go like this? That's the way your candlestick is actually still going to come in again. Because if it's actually going to obey it, you understand, it will show you a candlestick. It's not going to obey it and fall back. It will show 3 white soldiers. You understand? So that's that about that. Start wasting our time. Those are 3 laws. So with these laws, these are actually what these laws will actually lead us to chart patterns. You understand? Because chart patterns was derived from these 3 laws. You understand? So you understanding these 3 laws now, if I'm actually talking about the different kind of chart patterns we have, I'll be talking about the psychological this thing and derive the equation in which how they got these chart patterns. You understand? So I'm sorry for the disturbance, guys. So you understand? So I hope we actually got the first, second, and third law now. So now, without wasting much of our time now, let us go to chart patterns. You understand? You tend to understand all these things better when we start from the next class. We'll actually be trading from the next class now. Chart patterns. So now the chart patterns, we have different type of chart patterns. You can actually read more. You have the head and shoulder. We have the head and shoulder. We have the flag. The flag is more or less like a carnage.
Hello, sir.
Hello, sir.
Hello, sir.
Yes, I can hear you.
It's Mohammed Nuruddin, sir.
Okay, sir.
My question is that sometimes you go and draw your support and resistance correctly, but due to the market volume or market pressure, sometimes they come and hit the stop losses to show you that this is a breakout. You are waiting for the market to come back for test whether a support or a resistance level or a demand level. Sometimes then the market will come back to the opposite way. They will continue. If it is a buy or if it is an uptrend, then they will break their support level to show you that this is market. They will continue going on the uptrend. Then they will come back and shoot down to grab the liquidity. So how do you identify this is the correct breakout? This is the fake breakout, sir.
Okay. Like I said, that's you're already moving to the advanced level, you understand? Whereby we'll actually be talking about liquidity, you understand? Liquidity in the areas. We'll be talking about the external liquidity and the different internal liquidities. You understand? So when you're talking about that now, different things you actually have to put into consideration. Let me just say put a hint about that because I tend to enter it now. That one alone is enough to convince everything I've actually been explaining since morning. That's why I call it the advanced side. You understand? Now, for instance, now this third law, if these are when it gets to the advanced level, there are actually possible places that you will know that okay, fine. This you will be able to identify very fast that okay, what's this movement here is actually a false breakout, not a real breakout. You understand? And that will be because maybe probably you've spotted your fair value gap, you spotted your OB, you spotted like the trading the power of 3, your point of interest. You understand? And most likely when it actually pick up this point of interest, it has to like obey it and change directions after picking on the liquidity up. You understand? So we have a lot of liquidities. We have the old eye, we have the monthly eye. So that one is just everything is more or less in the everything is in the advanced part. So you just have to chill with us because it's another
Okay, I understand.
Another thing entirely. You understand? So, but what I would advise you personally is that when you want to put your stop loss, never put your stop loss in a place that is predictable. You understand? Because normally in the laws.
Okay, I understand, sir.
Okay, yeah, that's it basically. So you want to put your stop loss, always put your stop loss far,
I
far
know
above.
I know that power of three, is it the accumulation, manipulation, then distribution?
No worry, when we get there, you understand better. I don't want to.
Yeah,
People already
I don't want to rush into the. I understand.
after going live. Now
All
we are
right,
going to the advanced class. So now, without wasting much of our time,
all right, thank you.
but you can. There are actually
All
some.
right, thank you, sir. I don't want
Yeah,
to.
there are some videos. There are some videos in the YouTube channel where we actually talked about it. So you can actually go there. That's where we
All
actually
right, so
live.
please, can you drop the link the channel in the YouTube so that we go and follow it?
Yeah, we always drop it. So when I record this class, I'm actually going to drop the link to this class. So we can just use the link to opt into the channel. You understand?
All right, sir.
Like I was saying, guys, so we
All
have
right.
different type of chart patterns, the double bottom. We have the triple. Some people go for and say triple bottom. But I want you to know that all these chart patterns were being derived from the laws of supply and demand. You understand? So any other one you see by yourself, what do? Relate it to what the law of supply and demand. We have the rising wedge, rising, I'm just put together, rising and falling wedge. We have the symmetric triangle. Let me just put what triangle because any triangle can form. Rectangle, even circle, cup like. Now, let me just explain this. Okay, let me use Quasimodo. This Quasimodo, QM, they call it I don't know the spelling, but let me just use QM, Quasimodo pattern. You understand? So this Quasimodo is more like an advance of the head and shoulder, and I'll explain why when we get there. So now, let's speak this thing one after the other. The head and shoulder pattern. You understand? So now, this is what the head and shoulder pattern looks like. The price of the market coming like this, comes a particular period of year. And there's a push again, there's a push again, there's a push again, there's a push again. Now, let me ask you guys a question, and I'll be glad if you guys can actually answer because it actually means that you guys have been following me. Now, looking at this head and shoulder pattern now, what law did you think it obeys? Is it the first law, second law, or third law?
Gangarowa ya jiya nan muna shayi ba dora shi saman taya ba sai ya fada nan. Dan muna sallamewa da ni aka kama muka mai da shi. Kamata ya rika dora shi saman taya.
Is it the first
Wala
law,
kawai.
second law, or third
What?
law? Let me answer the question. Let me start. So now it actually obeyed the third law. You understand? That is the first breakout here, came in back, retested. Let me even draw it.
So we didn't see it, sir.
You can't see it. See it here now. This is what head and shoulder. Eh?
Your course, I'm not. Oh, okay.
See it here.
Oh, I've seen it now. Oh, I've seen it now. Okay.
What law did it obey? It obeyed the third law because now this was supposed to be resistance and the market was supposed to obey it here, but instead it broke it. And initially you will be thinking that for it to break it, it has to retest it and go in this direction. But instead it's falling back inside that price range. So obviously this was the third law of S&D, which is supply and demand, SG. Now, this is actually what it looks like. You understand? It's just trying to tell you that when this kind of things happen, it means that the price is coming, bam, in this direction. So once this thing is actually formed, you can actually place your entry here. You understand? You know, we have two that type of traders. We have the conservative traders and the aggressive traders. You understand? And what I mean by aggressive traders are traders that they just want to enter. They don't like they just need little confirmation before they enter. And conservative traders are like they have to wait for all the confirmation to be met before they enter. You understand? Both space, you understand? But both space, but anyhow, let me just try to be explaining. But now, if you enter here, you are actually going to be an aggressive trader because normally you are expected for it to break this. You know that when it breaks this support zone, you understand, to look for the nearest support, which is this one. Where's my brush? to retest it before it continues in that direction. You understand? Running out of time, okay. Wow, we are running out of time. Wow, that's crazy. We have less than 10 minutes more. So that means you guys will be the one to. You guys can actually go and read about the other chart patterns. You understand? I'll just draw. I'll draw them. I'll draw them for you. You understand? So, but you guys can actually relate it to the S and D yourself. You understand? So this is what the head and shoulder look like. So I was talking about the Quasimodo now, which is the QM. Now, if you notice this head and shoulder, you know that they have equal. Okay, these head and shoulders are labeled with leg 1, right? And this will be the left neck. Sorry, left shoulder, left neck, head, right shoulder, neck, leg. You understand? That's that about that. So now talking about the Quasimodo, the difference between the head and shoulder and the Quasimodo is that you guys will actually even see it yourself. I'm drawing the Quasimodo now. Now, can you guys actually spot the Quasimodo yourself? Now, to me now, I'll just say, because this Quasimodo has not actually been, it has even been coming out like that. Let me use that, it has not been. So now, I can even say that now that there are already 4 laws. You understand? There are already 4 laws guiding supply and demand. Because normally now, you know what was actually supposed to happen was like, it has to use this one, supposed to use this one too. It test this one, they'll come out, you understand? But now, this Quasimodo explanation has to deal with the advanced class, you understand? Because what it's just trying to say that there's already a break in the validation of an uptrend here, that this is an higher low. Because this will be uptrend here now. You understand? It's supposed to be a higher low, higher high. But instead of the creation of a higher low, a new higher low here, it broke the initial higher low to create what? To create a lower low. And the fact that this was not actually this is not actually longer than this. This 5 is no longer than 3. So it's telling us to say that there's particularly there wants to be a change in direction in price of the market, which means that what, guys, the market wants to continue that downtrend. You understand? So that's more or less like saying the advance, but this is what the Quasimodo looks like. You understand? So that's about that, guys. So let us talk about more Quasimodo. You said it's more or less like. So what does the flag look like? Now the flag look more or less like a channel.
First.
Understand? The flag look more like a channel. You remember when we were talking about trend line and channel, we differentiate between the two. You understand? What the flag is just like, maybe it's going like this, oscillating in a particular price, ranging price, you understand? Either horizontally or vertically for a little period of time. You understand? Now, what's actually happening here? What people trade most in chart patterns are just the breakouts. You understand? And you already understand what actually happens in the breakouts. Same thing applicable to SD, supply and demand. There might be a false breakout in chart patterns too. But when there are false breakouts in chart patterns, that's already an opportunity for you to know that the price of the market wants to go in the opposite direction in which it broke. You understand? So for instance, maybe the first breakout happened here in 3. It's an opportunity for you to know that, oh, this particular price of market wants to come like this, wants to break it bearishly, not bluishly. Do you understand what I'm trying to say? So this is what a flag look like. You understand? Oscillating in a particular price of market horizontally or vertically within a very short period of time. You understand? So now, what will a double bottom look like? Double bottom is more or less like it's respecting the first law. Now I was saying it the other time that all this is just respecting what? It's respecting the first law, second law, and third law of supply and demand. You understand? This is what a double bottom look like. Like this, like W. You understand? Like W, double bottom. You understand? So when talking about triple bottom, it means that they are what? It means that they are 3. You understand? So now if we relate back to this one, this is the double bottom, 1, 2, 3. Double top, 1, 2, 3. You understand? So that's double bottom, that's double top, that's triple bottom, that's triple bottom, that's triple top. So rising and falling wedge. Now, the difference between channels and rising and falling wedge is that the price of the market are enclosing. For instance, let me draw a falling wedge. You know, this is a channel. The channel can either be going falling or rising channel or falling channel. Well, do you know they're always equal and parallel to each other? Like, you know, sometimes they are equal. You understand? But when you're talking about falling wedge, the price of the market is coming from an enclosed from a open close. Let me like from an open, and the market is actually like shrinking. The price is oscillating. I don't even understand what I'm trying to say. You understand? It's coming like this, and the more it is coming down, this is falling wedge. You understand? It is actually like it's shrinking. You understand? So what they trade here too is can actually break bearishly, can break bullishly. You understand what I'm trying to say? So this is falling. Now, let me do rising. For rising, if that will be the case, you understand? It just bring its mouth up instead of down. This one brought it up. You understand? From an enclosed position to a closing position. You understand? So the price will be coming like this. So the first week should happen, it means that it's going to happen. So don't forget. So that's that about that. So triangle. Don't be surprised. Triangle. Let me see. There should be a triangle around this place. See that? Okay, sorry. Triangle. Triangle 2. The price will just be oscillating a triangle. That is very, very common. Any kind of triangle, symmetric triangle, any kind of triangle. Try to draw anything. Once it's form a type of triangle, is a chart pattern of it, any triangle. Some people we even call some pennants. Pennant is still a triangle. The reverse breakout should happen. It can break out bearishly or bluishly like others do. The reverse breakout should happen. Means that the price of the market wants to go in this direction. You understand? So now they will not tell you that we have continuation and reversal chart patterns. So how do you know the continuation and reversal chart patterns? You have to use, but most times actually, breakouts might not, first breakout might not happen. It might just be a direct breakout, you understand? But at the same time, so that's how you're actually going to use your reversal candlesticks, you understand? Because now this is actually serving as all these all these things bouncing the market up and down also serve as support and resistance too. You understand? For even circle too, price of the market will be the price of the market will be rotating in a circle. You understand? The price of the market will be rotating in a circle. We're rotating a circle. We're rotating a circle. You understand? So that's that. And others like that. You understand? So now, these chart patterns are other things you can actually consider. Let me say this. Don't forget, it's very, very important when you want to make a decision. You want to make a decision while trading around the zones. You understand? Because if you switch to a lower time frame, you understand? These reversal candlesticks are not really, really, you understand? If you switch very well, like you zoom out very well, you waiting for an what's the name of this thing, reversal candlestick around here. You might see a chart pattern around here. It might be a flag, it might be a rising wedge that you just put around these zones, you understand? But normally, when you spot this kind of reversal candlesticks now, that will actually like give you another confirmation that if this chart pattern should break bluishly, it means that the price of the market wants to go up. And this chart pattern should break bearishly around these zones, it means that that particular type of market wants to go bearishly. You understand? Because don't let me it's not always every time that you see 3 white soldiers. Those soldiers man are close to Sambisa. You understand? Maybe this chart pattern that it will show. Just have to like be patient. Patience says it was in training. Be patient. But you meet all your confirmations. Don't worry, when we get to the sign from the next class that will be going live, because we'll be going live from Wednesday. We'll go live on Wednesday, Friday, Saturday. You understand? Wednesday, Friday, Saturday, we'll go live. They start from next week again. We'll now enter the advanced level. You understand, guys? So that's that about that. We have less than a minute. So meet in the next class where you guys will actually understand us better. So you guys should get ready. Don't deposit actually. create an account with the broker, link it to MT5 and MT4 so that